So let's get finally to the economic calendar. So here's what we had today. So today we had Fed Waller speaking, and he's always dovish, so he's good for the markets. We had a 20-year auction. Look at this. The last time we had a 20-year auction, it took a rate of almost 5% to get rid of that debt. It's down to 4.87 now. So that's a nice move down on rates through there. And then we got the FOMC meeting minutes, and that is saying, we do have some distractors right now in the Fed, and I think they're going to cut at the next meeting because they have a lot of people kind of squeaking at the noise right there. So they're going to cave to that. So the other piece of this puzzle that we're going to talk about is Jackson Hole. When Federal Reserve Chairman talks at Jackson Hole, the markets are going to move, folks. And so we're going to give that to you, what he said, how he says it, and how the markets react to that. I think that's his speech is coming on Friday, but we'll be attuned to this. If he's going to probably say some things in interviews and things like that, we'll keep a concern on that as well. Now, tomorrow, here's the numbers that's coming in, and we're going to stay on the sidelines and wait for this. I don't know what these numbers are going to come in at. So we have initial jobless claims. That's what we're going to focus in on at first. How many people lost their jobs for the first time? Okay, but then we're going to focus in on, can those people or people getting let go, are they able to find jobs so the job lists aren't starting to accumulate through the continued jobless claims? We don't want this thing hitting 2 million, okay? That's the thing we truly don't want it to do, because that's meaning they're starting to compile on top of itself, and that's not good for the markets. But it would be good for rates, but guys, I'm looking out for me and you,